So then what does the action of a stock like an Apple tell us, or some of these semiconductor names, which did well in today's session and arguably are the poster children of the trade war?
Well, Apple's, to me, relatively easy to understand. I'm long Apple. I feel like we talk at length on this show about some drivers for Apple, which include a better revenue mix, more geared towards services, higher multiple capital markets, maybe now at 5G. Semis are harder to explain. I mean, think about semis, which are basically a couple points from all-time highs in the face of really not only the cyclicality of a trade war, but some of the bellwethers in that sector, including Texas Instruments and even Intel, throwing a lot of cold water on their guidance for where we even see restocking, let alone actual real end demand. So it's concerning, and I don't think you chase semis here, that's for sure.
Apple changed, the dialogue changed from an actual China trade stock to a stock based on fundamentals. And everyone was looking for the services to outweigh whatever the hardware was lacking or the slowing growth. Now, if you have hardware kicking in along with services, that to me is how the story changed. I don't think it has anything to do with China at all anymore. I think
just because they're going to sell more iPhone 11s, all of a sudden the China threat is no longer?
No, well, I think that the China threat had dissipated to a larger extent in the last couple of weeks. And then when the notes started coming out that the iPhone is actually selling better, and now all of a sudden everyone said we discounted that to a secular decline, I think the story does change for the better.
I think that they kind of get a pass on this quarter, right? So this isn't the revolutionary phone, I guess, that we're going to see for 5G. So I think they
have... On the calendar third quarter, right?
Right.
Yes.
That they announced October 30. Yeah. So...
The 11.
What?
The 11. Right? Is that where we at? We had numbered the iPhone.
Oh, the iPhone 11.
Yeah.
Oh, we're talking about the quarter, the pass in the quarter.
The quarter.
So I think that, if we see services, that part of the story needs to stay intact. Right. We need that. We want to see, how the evolution of Apple streaming does. But I think that they kind of have a pass on the hardware for a little while. I do think the China threat still exists. There was an article over the weekend about Tim Cook's relationship with Trump.
President Trump.
How he's been able to...
Isn't this your point? I think this is your point, and you're not even trying to make a point, Mel. But I mean,
well done
Apple
for that
absolutely
point.
Is a trade war stock, even though I know what Steve's saying.
It's still going to be subject to tariffs.
And so Apple is kind of levitating, despite the fact that we know that there's bottom-up drivers for Apple. It's the same thing with semis, and it's basically a market that seems somewhat blasé about a lot of bad news and should have done more today. And what does that tell you about where markets are? I think it does tell you, we talk also a lot about positioning. There's a lot of hedge fund managers that have missed their bogey, and it's time to drive it into year end. And I do think when you look at where net longs are in the hedge fund world, even though gross longs are very big, people are not positioned long and need to find stocks like Apple that are not terribly controversial to get long.
Apple is as poised as any stock in the market to break out, and not many stocks are, right? So what do we know? It's day-to-day action. Of all the things that have ever been tested, the biggest quant-ups in the world, relative strength, consistent in the ranks is a factor that one wants to embrace. The day-to-day relative strength, the week-over-week relative strength is very impressive. On a classic charting level, it's a breakout candidate. And I think it's going to break out.
And what do semis look like?
Semis are a little, well, they're to be marveled at how well they hold in there, but they're not poised to break out.
So perhaps they are trade war stocks at this point.
But the semis actually felt to me that they bounced on a smaller deal getting done, and that anticipation, the positive anticipation of a smaller deal getting done without any IP involved. I'm surprised that President Trump hasn't walked that back a little bit and said, we're going to get that done in stages. We're going to get it either in stages or a big deal, but we're going to get something done. He should be walking it back right now.
So you have been relatively bullish on the market. So now that you think that a big deal is off the table, do you pare back your expectations?
Yeah, I do pare them back a bit. And I also think that once the deal gets done, it is a very large shortable event for the overall market. Because
you mean the small deal that you're expecting?
The small deal, but I think that whenever a deal gets done, that's your time to ring the bell and probably start exiting some longs. Because China is the growth engine of the world, or at least we've been told that for years, and it has been the case. So if they give up something, by its nature, their growth slows even more. If that slows even more, we slow.
Let me ask you, what's the risk reward, though, for staying long at this point, just a couple percentage from all-time highs, versus the downside, the sell-off that we'll see after that deal is announced?
Yeah,
does that work out?
Yeah, it's diminishing to me, where at this point you had to stay long because you have Powell easing, where last year we had the rest of the world was tightening, Powell was tightening. Now he's changed. He's softer. He's more dovish. You have that caveat of a trade deal getting done. You do have earnings, so there's a fundamental case that I think that earning estimates came in too hard. So you have that. But other than that, you should probably.
But again, the notion of staying long, that's just 10 stocks, right? I mean, 10 stocks are more than the bottom 350. You've got, think about the preeminent brokerage firm in the world. Goldman Sachs is down at 2 and 3 and 4-year lows. Morgan Stanley. It's never been that good. The S&P has been good, but the internals have been struggling for a long time.
What's the normal? You have some number of leaders, obviously, and
always,
then a number of laggards, right? So
what
how
happens
does
is,
this
think
compare
about
to the average?
it's no different than when a good technique argues for clustering into fewer and fewer names. Children know this when they play musical chairs, right? They're casual and they start to go around, but then they get tighter and tighter, and they jump from chair to chair. People hide in names. It's good technique until the end. They say, well, I'll stay in Visa, I'll stay in Microsoft. As more and more stocks, from Caterpillar to FedEx to brokers to banks to industrials, roll over. Guess what's happening now? The big rails are all rolling over.
By the way, we have never played musical chairs on. We love games
we
on
play it all the
Fast
time.
Money,
I sit there sometimes.
That's true.
Chairs are brought in. Sometimes there's no chair there.
Musical chairs
true.
all the time.
Okay, so in terms of musical Fed chairs, Powell is going to speak tomorrow, and if we don't have a trade deal, there's no question that the Fed, to me, is going to go, and I mean more than once. And to me, right now, I think the Fed only goes once. I mean, if you listen to Rosengren, if you listen to some of the other folks, they're not ready to do much at all. So I'm not saying that bad news is good news, which is what this kind of implies. In fact, I'm just telling you that in terms of look at the bond market, which also the 10-year actually sold off 0.5 point today. Should that have been happening on a day when people thought that maybe the economic news got much worse when the trade deal
bad news
looks
was
farther
good
away?
news last week. So when we got that bad number last week, you saw December. That's what you're talking about. They're going in October. You saw December. The odds of them going doubled. So bad news for the market has become good news, at least on the rates front, for a more conducive bullish Fed or pro-growth Fed.
I think it doesn't make sense. I understand that's happening. It doesn't make sense to me that a weaker economy would bring the Fed back in to try to strengthen the economy. I'd much rather see better economic numbers, right, and cut to the chase. We do have some data. I agree. The Fed, doesn't. There's mixed voices there, but. Right. Let's see. We have some PPI data tomorrow. If any of that comes in hot, we have the unemployment at a 50-year low. That's some cover for a Fed that doesn't want to keep cutting.
Right.